and I'll hand you straight over to Tom. So, here we go. The record is running, and I'll just show the screen, and then we'll be ready to go. Okay, so everyone, Tom Williams.
Thank you, Peter. Yep, Tom Williams here, speaking to you from Worthing, a fairly small resort town on the south coast of England. It's about 50 miles south of London, and it's on what we call the English Channel. French call it the French Channel, but we call it the English Channel. And it's lovely warm, funny enough, for this time of year. Anyway, hi everybody. I hear there's a lot of newcomers here. I'll just mention the principles for some of these newcomers, just so they got some idea what we're looking at. If you're new to the VSA concept, or you're not familiar with it, then what we do, and I think once you hear the logic, you have to nod your head in agreement, and that's why we have such a huge following that stays with us, is that the stock market, like any other professional body, has professional players in there. Now, when we talk about professional player, what we really mean is that players that will throw in their normal amount of risk, that's usually at least 50,000 contracts. Now, a normal trader will shudder at that amount because he's not professional. But when these players come in and start throwing in 50,000, 100,000 contracts, and other professionals follow, it creates what we call an imbalance of the supply and demand that pushing the market either up or down. But the thing is that when you follow a chart, you can actually see them coming and going. And that's what we look for. And as if naturally, you have to refine it a bit after a bit, because what we look for is to watch them coming into the market with these huge amounts, supporting the market. And then we know that they need to test the market, because they know there are no friends in the stock market, and there are many other professionals out there that would love to, should we say, do them in. And but they can't go against the balance of supply and demand. That's what's driving the market. And we see them coming in and we see them leaving. And that's what we're looking at. And these automatic signals that appear in the software is revolving around that fact. That's what it's looking at. Professional money coming or going. Nothing else. It's not looking at news. It's not looking at formulas, anything mathematical, nothing. The only thing we might look at as mathematical is the Fibonacci 50% retracement. And that's only really, no, it's actually retracements on this chart we got up at the moment. What charts is, Peter? S&P, we've got the S&P 500 daily cash market up on the chart there. And you need to remember that this cash market is where the equity lies. This is where the powerhouse lies. This is where the value lies. And more or less everything else you see or hear about the market revolves around this cash market, because that's where the equity lies. It's almost like I talk about the deeds to your house, right? I mean, it's the deeds are only worth money when the house is standing and it's okay. And so the deeds represent the futures market. Now this chart here, we can see that we've had a retracement, shall we, or a fall. Now, what's interesting about this chart is how well the simple trending system works. Now, what's a simple trending system? A simple trending system, in this instance, every time the market's falling, the bar is red. And the reason for that is that the close is lower than the close of the previous bar. The computer then automatically turns that bar red to let you know it's down. Now you may think, oh, that's coincidence, isn't it? It's not. That's done deliberately by the professional players. They want to maintain control of the market. And if they're in a bear move, they know that having the close lower than the close of the previous bar means that anybody who's made a mistake in the past can't get out without a loss. And that's why it's like that. And the opposite, of course, is true when you get a bull market. The bars are blue as it goes up. But this is interesting. Now, earlier on, this particular bar here is a widespread down. And I thought at the time when I talked about it, it might be a shakeout or the start of a shakeout. But that's turned out to be a sign of weakness. You've got a widespread down. Look at that increase in volume. Now, they only said it's the reason why I said it might be a shakeout is there's no obvious sign of weakness in the background. Now, sign of weakness, right, is when you see an up bar and the volume is very, very high. That means that the professional money are closing out positions as the market moves up. They're taking advantage of the fact is the market's moving up. Therefore, other professionals can't damage them selling as the market moves up because it's bullish. It's going up as far as everybody's concerned. But they're unloading. But we can see that happening. And I can't see that, but there's a bit of no demand around this move up here. Anyway, the market's falling. Look, fell down, down, down. Now, when you're following the simple trading system, you can allow for one up bar, right? And as long as that up bar's on low volume, which it is, look, low volume, showing that the professional players within that move are not interested in the up move, and that's why the volume's low. And it's even a narrow spread, which reinforces that. And it also closes in the middle. So you've definitely got a clear no demand up bar. In other words, you're expecting lower prices. Market falls. Now it's gone so low that something seems to be happening here. And we've actually got an automatic signal appear, which tells us the strength is coming in. Right, now that signal came in before that up move there. Now, funny enough, that up move there, I'll let Peter tell you a story of that up move.
Yeah, hi everyone. I was just saying to Tom before we started, that up bar, the up move in the price there, that was on Monday. And of course this was in the same time that there was talk in the USA of budgets not being passed and problems being created by the federal government, so-called, not having any money to pay people, etc. So on the back of all that sort of rumour, the market went up. So it just occurred to me that if people have been listening to the news, they might have been a bit worried, and I don't know, perhaps, yeah, it's all smoke and mirrors, Tom says. So yeah, so you can't rely on the news. You have to look at the chart, is the bottom line. I'll just pass you over. Oh, was it? Oh, Tuesday. Yeah, sorry. Tuesday, that was the day when it was announced that there was problems and that various entities would be closed off, like public parks and the internal revenue, etc., etc. So I don't know much about that. I just see it on the news. But however, the main point being is don't rely on the news because it can wrong foot you.
Thank you, Peter. So the so-called bad news, the market shoots up, look. So you've got to be very, very wary of news or announcements. Very, very wary. Matter of fact, I never lived to them, but it just shows you. And that bar is up on low volume, look. So there's actually no demand. Okay, so the market next day is actually a test, look. So there was a bit of strength. Don't forget we've got this in the background. There must have been some strength of some sort here. No demand, a test. Still not good. Down it comes. But that market's fallen, look. And it's getting ominously close to this lower trend line, look. The more the market stretches over to the right, the closer it is obviously to get to that lower trend line. So trend line's busy trending up while the market's falling. But this one is a down bar, look. It's actually closed almost in the middle. And the volume, although it's not terribly low, it's certainly not high, look. And there's actually some sort of signal there as well, which tells us strength is coming in. So you've got to be very wary and realize that there is some potential strength in this market at the moment. Now, okay, this, you notice that there's a line across the top, and the lines, you can't see it down the bottom. And there's a line here. This is the 50% retracement. That is about the only mathematical formula that I ever look at. And it does give you some idea where that market's likely to hold. They say that if it drops below that substantially, then the market must be fundamentally weak. If it holds above, like it looks if it was here, then it shows you there's a built-in strength there. But that's, I don't really believe in too many mathematical formulas. And why don't I believe in a mathematical formula? Like all these traditional ones, stochastics and all the rest of them. The reason is that in the market with these professionals, there's so many clever people, and I mean really clever, that are backed up by serious money. If there was a formula that actually worked, right, they would be fully aware of it. And as that formula started to materialize, they would be in on that, buying it or selling it like hell. And it would immediately dilute the formula. In other words, it wouldn't be there anyway. And that's why you look back in hindsight at these charts and you may see, oh, look how that one worked. Look at this. It worked because nobody was trading it. That's the reason. And that's the reason why professionals don't look at those sort of things. Now, okay, let's look. Peter, put up 30 minutes, say, of the, that's now. That's 30, is it? Now, you can look at any time frame, and they'll all tell you a story. Some give you more information than others. Now, there's no reason why I picked the 30 minutes. But I know I was watching the market right as that bar formed. It's at the opening. Nothing there, no. And as the market opened, it plummeted down there to that low bit. In other words, it was an attempt to catch stops, mislead as many traders as possible, thinking it's going to fall. And it suddenly reversed and went up there. So that will tell you the market is devious, it's cunning, it's driven by people that don't have your interest at heart. Okay. Market goes up. Now, markets don't like very high volume and up bars. Now that one there is coloured black because it's level, but that's certainly, the system calls it an upthrust. Okay, it's an upthrust. It's a sign of weakness. Study these dialog boxes, and there's a lot of information in there. If you keep studying and know all these boxes, right, you'll get to learn the market quicker than anything. Now, okay, so there's a sign of weakness there, look. There's actually a red arrow there. Now, I've repeatedly said many, many times, right, that if you see a test on the very next bar after a sign of weakness, that's a very strong sign that the market wants to shoot up. So it goes to the next bar, look. Test after upthrust. There you are. Now this is all automatic. That signal was written about 10 years ago, and it'd be just working just as well another 10 years, because that's how the market works. It works on supply and demand. And there's the supply, right? So they test it, and there's no supply. Look at that low volume. When you see a red down bar and the volume is low, it means that professional money are not selling. They're not interested downside. So once you see that, you know it's going to try and go up. And that's why it turned around and went up like that. And it's still going up. It's Friday, so you've got to be a little bit wary of Friday. Now, please, Rita's looking at a computer screen here, and she loves to read out questions from you. So please type in your questions.
There's one here from Jerry. You were talking about newcomers to VSA. So, Tom, from what I'm learning is that newcomers to VSA get stuck on studying the look of the individual bars rather than on the principles of the move. This is why a newbie cannot tell the difference between absorption volume versus overselling on a large down bar with high volume. After one understands the principles, then it all becomes clear. I made these similar mistakes and now realize I did not focus on the principles but rather the bar shape.
Yeah, that is very true statement that you just made. Now, Gavin has this new deal he's doing where he sends out emails when a principal appears. Now, I would have thought that's very, very good learning bit for you, because a chart comes up showing you what these principles are. All it's showing you is the balance of supply and demand, hopefully some of the more obvious ones. But as you get more and more better at reading these charts, now whether he's got this principle here, but I've mentioned to you this, must have been 10 times in the last month or so. Whenever you see a red signal like this, and you've obviously got some strength in the background, that's a shakeout there, look. And the very, very next bar, tests. That means that the professional money definitely want to know, is this all right to go up? And if the volume is very low, they'll go, now that is the principle. Now, if Gavin's got any sense, he'll have that in his emails. You'll be alerted to that. Now, whether he's done that, I'm not sure. He'll be here next week. I'm going to ask him.
Steve is asking, is that pink bar low volume? So, Steve, I assume you mean this down here. So I'm assuming that, but if you're, or even the one after, but a pink volume bar means that the volume on that bar is less than the volume relative to the previous two bars. So it is low. It is low volume and read as such. So this is low, but this is even lower. Okay, I hope that answers that question. Oleg would like us to look at yesterday's ES. Do you want to put yesterday's or daily? It'll be daily. I assume it's daily. Yeah. Tell us if it's not the daily, but we'll put up yesterday. We'll put up the daily chart. Yeah. Or what sort of time frame, Oleg? Yesterday's intraday. So hourly chart, half hour, 20 minute, what would you like? We're starting with the half hour. Yeah. Any time frame, he says. So. Okay. Okay.
Yeah, so Oleg's asking for intraday for yesterday on the S&P 500 future, which we have in front now on the screen. So the market, Tom, just so Tom knows, opened on the close of that bar after some weakness has shown up in the pre-market Globex. And I'll hand you over to Tom.
So what do you want? A rundown of what happened yesterday? Well, we got some weakness there, look. High volume in that bar is weakness. Right. And then these wide spreads down that you see, like that, closing on the low, are very common after signs of weakness. Why? Because the professional money want to lock as many losers in the market as possible. Now, a loser is somebody that if they sold right now would be losing money. Or even the fact is that somebody was clever enough to think, I'm going to short this. And now that huge widespread, and the way human beings think, they probably think, oh, God, I missed that now. Right? And so that's why those wide spreads down close near the low, and the volume is fairly substantial. But the main thing is here is the price action that's done deliberately to lock as many trades in or out of the market as possible. Right? So it falls. There's your red trending system. Okay. Now there's a little bit of stopping volume coming in. Look, there it is. The computer's picked that a little bit up. It tells you there's some stopping volume there, and that's why we went up a few bars like this. But there's obviously some no demand up there. It fell off. Sorry, I've lost my way now. That was last night, was it? Right, so it closed round about there. To all of you who don't know me, I'm afraid I'm 84 and my eyesight's going a bit funny. But that's why I have Peter and Rita here. They're brilliant. And without them, I doubt whether I could do this. But that was the close of yesterday. Right. Okay, so the market moves sideways. And of course, we've seen this bit here. And now we're back here. Is that all right for him?
Peter, can you put ACI daily chart for Pete? ACI. This is ACI, whatever that is, for Pete. Would like you to look at that, Tom.
Right, daily chart. Well, first of all, we can see there was some definite signs of weakness at the top here. Right. You can see that's more or less the top. And it goes on up here, look. And that's up thrust. Now, that is a true up thrust. A true up thrust is when you get it after weakness. Professional money are fully aware there's weakness here, so they mark it up, mislead as many people as possible, catch as many stops as possible, create as much havoc as possible, then reverse down. They know it's going to fall. So it falls, look. If you ever see a green arrow appear, which may be true, but if next bar doesn't back it up, then you ignore it. Next bar has to be up. So the market falls down here. We are into today, and there does appear to be some buying right here. That was Tuesday, was it? Right, okay, so we're up to date to yesterday. Last bars yesterday, right. But there's some definite buying here, look. That's definite buying. You've got a narrow spread down bar, look, and a massive volume. That's definitely buying. Now, what we'd like to see now is this to go up a few bars along here, and then come back down and test its level. And if that market then falls back down into that level and the volume is low, right, then that's going to go up, because the balance of supply tells you loud and clear that the supply here, seen with this very high volume, right, narrow spread, shows you professional money have stepped into the market. It must have done, because if they hadn't been buying there, if that volume hadn't represented buying, that wouldn't be a narrow spread, would it? Something's put a floor underneath the price to stop it going down. And the only thing to do that is buying, isn't it? Now, that's fine, but the way professional money works, they don't want to take that up. Excuse me. They don't want to take that up until it's been tested. And that's what we look for. And hopefully that's what Gavin's alerts will pick up for us. I'm not sure whether it will or not, but you can see it visually. So that's very good. Good chart this. Definite buying there. No question that, look. Now what we want to see now is a few up bars and it come back down to that level. And if the volume is low, now don't forget, that's why the computer colors it pink, because we're looking at relative volume, relative to the previous volume. That's all that interests us. We're not interested in accurate figures. You could be millions out, doesn't make any difference to us. It's relative volume, relative to this. If the volume is low relative to this, right, then you're going to get a bull move. Yeah.
Yes, Jack is saying, Tom, it looks like the volume may have been tested intraday over the last 3 bars. Would you always wait for a test over a longer period? Pete says the chart says bag holding as well. Hang on. Yeah, that's a bag holding signal there, Tom. Yeah, but the question, I'll repeat what I just said. Sorry to flip from one to the other. Jack says it looks like volume may have been tested intraday over the last 3 bars. Would you always wait for a test over a longer period?
Well, the thing is that if that's a bag holding signal, that's one of our strongest buy signals we have. And I thought it looked terribly strong when I looked at it. That's why I was emphasizing definitely buying there. The bag holding is a signal that is very, very reliable and very powerful, because it cannot possibly be anything else but buying there. It can't be anything else at all. When you see a down bar, the low is almost in fresh low ground, right? The spread is as narrow as that and the volume is high as that. It has to be bag holding. In other words, professionals are telling everybody, look, I don't care if you want to sell, I will take it. And they open their bag up and say, look, throw it all in there and we'll take it. It's a very powerful signal, bag holding. But as far as the test is concerned, this is a daily chart. It'd be nice to see a test on a daily chart, to be quite honest. But there's your skill as a trader. Once you learn to read these charts and get to know how it all works, which is fairly obvious after a bit, then your skill as a trader kicks in, and then you'll start making all the money you ever wanted to make.
Sorry for that little break. Carlos wants gold 15-minute chart. Tom doesn't get the intraday charts for gold. But shall we put up the daily, Peter? Put the end of day or something, I don't know, whatever works. Anyway, he says, Tom, Carlos is pointing out that on the gold 15-minute chart, which unfortunately we don't have, they shook the market and up-thrusted it to trigger stops in both directions. Yeah.
What's actually doing now? Because gold has got so many amateurs in there trading, they can do that. They ram it up, ram it down, and get away with it. But in a proper professional-driven market, say like cotton or cattle or something, they can't do that. But they can do it in things like gold. Now this is an end-of-day chart. It doesn't look as if it wants to go up. Why do I say that? Because there's some stopping volume, a little bit here. Right, and that looks like a test. And that must be yesterday. And there's definitely some signs of strength here. Although we got, this is a sign of weakness. This is what we call a weak bar, look. And we call that, why is it weak? Because it's got top tail. It must have been rammed up there at some time during the day. Catch stops, mislead as many people as possible, look. And that finishes up looking like that. That's what we call a weak bar. So you've got that behind you, so you want to make sure that here, that you see a proper test. I personally don't trade gold. Gavin seems to like it. But it's all very exciting, whatever you look at. Okay.
Okay, so I'm looking at what questions have come in. So we got gold. Just looking here. So you haven't read Colin's question, have you, Rita? So Colin is saying, could we please look at the YM, that's the mini Dow, weekly, say 40 bars, and comment on whether it looks like it is possibly starting to mushroom over now. So let's get the right chart. Yeah, so this one here, I'm just going to convert that to weekly. I'll try to. Just bear with me a moment. Right, so now the question is, I'll read again. Colin's saying on this weekly chart for the mini Dow, is it? It looks like it's possibly starting to mushroom over. Tom, what do you say to that?
less bars up. What's this, a mini? Right, Peter's going to put, oh, that's it. Well, it certainly doesn't look healthy, does it, there? As far as long position is concerned. That's an upthrust type bar. And that is a sign of weakness, and that's why it's come off, look. But I wouldn't say that's mushrooming over. This area here looks a little bit more mushrooming over, look. This has just simply gone up into a clear sign of weakness, and that's why it's come off. But I wouldn't say it's mushrooming over. Mushrooming over is when you could clearly see, it's almost like this one here. This is a bit more like it. But all that area must be sign of weakness, must be distribution. I wouldn't say that's mushrooming over.
So when there's 40 bars up, I think Colin referring to as doing this, you know.
Well, these areas here are sort of entities in their own right. Those, in other words, they're phases, I meant, in their own right. Now, those phases may very well be part of a main phase. We're not sure of that. But these appear to be mushrooming over, don't they, look? But this one is a classic sign of weakness back up into these areas that could potentially be very weak. So that looks ominously weak, doesn't it?
Yeah. John would like the New Zealand dollar, and I asked him for the ticker thing. He thinks 6N, Peter, because I don't think we've got anything up there on our currency. The news, 15 minutes. Right, so this, Tom, is the... Does that look right to you, John? We wonder if we've got the right chart. There's this... It's a 15-minute chart of the New Zealand dollar. Yes, he says it does look right. Peter's just pointing bits out to Tom. Yeah, you say it in there.
Well, Peter's just put that larger picture up of the frame. Now, this widespread up here, with that increase in volume, could possibly be absorption volume from the traders to the left. Because if you go over to the left, look, you've got quite a few highs all around here. Now, that could be. Now, you often see this sort of thing. So they ram it up, the volume is quite high. Notice that there is a sign of strength, a test on the previous bar.
That's on the wrong one. That's like one more to the left. Yeah, basic test.
So there is a basic test. So that could make it potentially bullish. Because that's there for a reason. Professional money would be fully aware of that. So the widespread up, look. Now the computer automatically will throw a red signal up because it doesn't like that very high volume supply, which is true. Markets don't like ultra high volume and up bars. However, if that's a genuine absorption volume, they will test. Now as the market falls here, they're taking a long time to test, but there looks like a test here. No supply. So that could be bullish. That New Zealand dollar, is it?
Yeah,
15 minutes. So it's well worth keeping an eye on that. But that's interesting. But you've got weakness here with all these tops way over to the left. You've got a test followed by this widespread up. That could be pushing up through supply to the left. Now, yes, we've got a red signal there. That's because the volume's so high. But we know that if they test it and there is no supply, which it looks if that is what's happening there, that could potentially be bullish. That's an interesting chart.
Edmund would like ARG stock. ARG, Tom. That's the daily chart of ARG stock.
This is a stock, ARG. Right. What's happening in the background? So it looks as if it hit a low here. It hit a bit of supply up here, look. There. Looks like a bit no demand. That looks like a test. And there's no supply there. So potentially, that looks as if you could get higher prices. And the reason I say that is it does not appear to be any massive supply has appeared on up bar to show professional money is dumping their shares, their holdings, bought at low levels. That will mark the top of these moves. It's whipsawing a lot. There's lots of testing going on.
I don't know what index it's in, Tom, but it might be acting stronger than index.
What index is it in?
Yeah, ask Edmund.
Edmund?
Oh no, he did say New York Stock Exchange, actually.
What, the Dow?
The Dow. Yeah.
Well, it's also acting stronger than the index, look. So that's good. That's definitely a positive plus to this stock. It's acting stronger than the Dow Jones, which it's part of. So that looks to me as if it wants to go up. So if you're already long, you'd stay long, I would have thought. Okay.
Carlos says, thanks for letting us know that cotton is a professionally driven market. Is the S&P 500 oil and corn professionally driven as well, those markets?
Yes, they are. All those commodities are what we call professionally driven. There's professional traders in there that do nothing else. Matter of fact, they specialize. If you're a professional trader, you don't trade corn one day and then switch to oil or hog's bellies the next day. You specialize. And that's what I've always recommended you lot to do, is to specialize if you can. And then you'll gradually see it. Because all these markets work on these principles that we're trying to show you. If you're not clear, please ask. We've got Philip Friston, who does comments in the VSA club, and he's brilliant at all that. Gavin's good at this, but not so good as Philip Friston. and we can answer any questions if we can. Okay.
A few more questions on what you've just said. So two comments here. One from Grigory. He says, is there any market that is not professionally driven? And Carlos says, so is gold the only market full of amateurs that you know of?
Well, silver, gold. You know, that's why we never recommend these so-called penny shares. It's all loaded up with amateurs, and they're liable to do anything. They could be whipsawed, all sorts of things. But most of the major markets obviously have a big professional interest. The ones we look at usually have. And you could see their footprint. As somebody once said, an elephant can't walk through your front garden without leaving footprints. And professional money can't move in and out of these markets without relatively showing you their volume or activities, which are an activity of the volume or the activity below, and on that, what was the price spread? If it was up on narrow spreads, volume very high, activity very high, then they must be selling. And so on. But you'll get to pick it up. There's no question about that. I don't know. I mean, when Rita arrived, she didn't know anything at all about the stock market. Absolutely nothing. And how many years ago was that, Rita?
How many years was it, Peter? I can't remember. About 4 years.
4 years ago. Now, I could certainly recommend her to trade anywhere.
Right, hang on. Okay. Hello to Eleni. Eleni, Peter would like silver charts. Can you put silver up on the end of day? That looks a bit like that gold chart that we looked at. Yes.
Could you put a longer thing up? Yeah. So this is end of day, is it silver? Well, it's obviously fallen off here. I always like to draw trend lines. Peter, could you draw trend lines from there to there and the first point of support, showing the market's falling? First 2 points of supply, first point of support, which is back here somewhere. That was an original Wyckoff way of trading, drawing trend lines. Now, trend lines immediately give you an idea, a very good idea, of the overall direction of the market. Now, by that, we can see gold silver slap bang in the middle of a trend line. Look. It's not recommended you do anything in the middle of a trading range, although we do have a sign of strength here of some sort. What's that say?
That says strength coming in.
Yeah, well, that's possible. True. You clearly see it's down. And to me, I would not be interested in this unless I saw stopping volume coming in. They will mark this down one day, and you will see ultra-high volume. If the spread's narrow, then you know professional money stepped in and buying. Then you want to see that area tested, and then they're liable to take it up. you have to look for these setups. It's no good going in on trading one of these, especially silver like this, on some sort of rumor or what you've heard or read in the newspaper or anything like that. That would be a disaster. The only way you could go into this type of vehicle is if you see what we call a setup. If you don't see a setup, leave it alone. Because the setup's not there. You'll see a setup is after a fall, like this, been falling for some time, look. Okay, you'll see very high volume or activity on the down bar. If the spread is narrow, especially if it's in new low ground, especially if the bar closes in the middle, right, then you know definitely professional money have stepped in because they can't hide that, right? And then you're looking for a test. Professional money, there's no friends in the stock market. And they know perfectly well that although they've moved into the market in substantial amounts, that other professionals would love to rip them off if possible. And therefore they have to make sure that they're in full control of that market, right? And that means a test before they mark it up. So it's no good just going in, imagining or on a gut feeling. You must see the principle. If you can't see the principle, leave everything alone. Otherwise, you're just going to lose money.
Eleni would like the weekly chart as well. But before then, Peter, Colin is saying, could the third last and the second last bars be a Wyckoff spring? When you explain, we'll go to the weekly chart.
Yeah, that is definitely not a spring. The spring is usually related to stocks, where you see the stock fall, you see the volume come in, you see the professional footprint as they move into the market, and then it tightly moves sideways for some time as they're absorbing and buying more or setting their position up. And then when they're ready with that position, then they have a real markdown. It's like a shakeout. That's a springboard. And the last few bars, nothing like that, look. Okay? All right, I'm going to put a weekly up. Right, can you put less bars up, Peter? That's better. Well, the last bar there certainly looks like a bit of a test, doesn't it? That's not a springboard, though. Now, we've got some strength here, look. Okay, this is a weekly chart. Right, market responded, widespread up. Okay, could be absorption volume. Run out of steam there, look, no demand. It fell off, look. Now that looks like a test to me. And if that finishes up like that, you'd expect higher prices on this. Because they're testing the amount of supply. And if that volume remains low like that, then there is no supply. And if there's no supply, it's going to go up.
Okay, Pete saying, Peter, can you put up AAN? Another chart with massive daily volume is AAN.
Well, is it an up bar or down bar?
We haven't got the data. So
No, but I'm asking the...
oh, is it an up bar or down bar?
You have to ask Pete through the microphone. Pete, Tom's asking that massive volume today, because we don't get that data. Is it an up bar or a down bar? Is it up or down at the moment? So far. I'm just waiting for Pete's response. Looks like a shakeout, down bar trading near the high.
It's high volume and down bar.
But it looks like a shakeout, down bar trading near the high. Yeah. But it's trading near the high at the moment.
Well, yeah, right. Without actually seeing the chart, I mean, I've had people describe charts to me before. When I look at it, it's entirely different. But this weakness here, this is what we call a top reversal. And this here is weakness. This is an up thrust. Now, if there's a massive volume on the down bar here and close near the high, it could be an attempt to shake the market out because it's been trying to crawl up. It's got lower highs, higher lows, I mean. But there's weakness everywhere. There's weakness there, no demand in here. So personally, I wouldn't be interested in doing anything with this until something very clear appeared to me.
Right, yeah. Tom can't see that though. Yeah, Peter's gone on his computer, but we can't show Tom on this, what's it called? This contraption? An iPad.
Yeah, it's quite a widespread bar that's gone down to the...
Peter's just describing it to Tom. Do you want to say something?
Peter probably has got the intraday chart, but I can't see it on his whatever he's got there. iPod, what do you call that? iPad. But according to Peter's description, the volume's too high. It's all very well having a shakeout, but if that's going to go up, you need to see a test. Markets don't like that ultra high volume.
It's about 5 times the volume.
Yeah, that's right. There's too much supply there, and you've got all those bits of weakness there. So that's things going to go sideways. It's not going to shoot up, and it's probably not going to shoot down. It's probably doing what it's doing now, more or less crawling sideways, which will drive you to tears if you sit there and watch it. What's the S&P doing now?
Let's take a look.
30 minutes. Right, it's holding its own, which is understandable, because that there absorbing volume to the left. Right, bit of weakness there, tested.
It's a very low down bar there on the right.
There. Yeah, that market looks as if it's still trying to go up. There was very little evidence at the top of this market, this daily chart, that it was going to come off. However, if you look at a weekly chart, there is a sign of weakness, slap bang right at the top. Put the weekly chart up, can you, Peter? That's it. Now look at that. That's a weekly chart of the S&P. Now that is definitely a sign of weakness there, look.
Supply coming in.
Supply. It's as simple as that.
Now, if you were to
That's yeah. What there? Well, you never know with these volume half the time. As far as we're concerned, VSA gets away with murder because we only use relative volume. And you could be millions and millions out. It'll still work because it's relative to what's happened in the past, or the past 10 days, I believe it is. Or, yeah. So that's interesting. But there's definitely a sign of weakness right there, slap bang at the top. This is a weekly chart. So when you see that, you definitely expect lower prices. Now, if it does go up on no demand, back up into that area, it'll come off again.
Shall I turn it down?
Yeah, it's a thermostat on the wall.
Yeah, right. 6J, 15 minutes for Grigori. So that's the Japanese yen, Tom. Should we put bigger picture up first, Peter, or? Yeah. To start?
Well, I don't specialize in the yen, but looking at the low here, I mean, we're looking for principles. And if you don't have these so-called setups, don't do anything. Where's the intervention, professional money? Where's the down bar on massive volume? Narrow spreads, I can't see it. Now, it may very well go up, but you can't catch them all. There is a automatic, there must be some strength here. There must be some stopping volume, look. Computers notice some. That's probably why it's going sideways. If that volume remains low as the market falls, it may very well go up a bit. But I must admit, I don't follow the yen. But all these charts basically work so. All I can say to you is you do nothing unless you see a principle at work. Now, even here, you see you've got this huge widespread down, look, close on the low. Now, that may look to you just like a widespread down, but that's a sign of weakness because, look, it's pushing down through this low here. If you draw a line from there, look, there it is, look. That's normally a sign of weakness. That's something most people wouldn't notice.
Well, we've run out of time, but can we do one more, Tom, for Steve, who asks, what is the most important part of a test bar?
The most important part of a test bar is the background. What do you have going on in the background? Right? If you go to the bank, he'll want to do a test on you. You ask him for a loan. He's not interested in looking at you across the desk right now. You may pass a test right now, but he wants to know what's happened in your past. And then normally, a proper test, you'll see these down bars on this massive volume as professional money step into the market. And then when you see a test on low volume, then that's screaming out loud at you. Yes, look, they're testing that supply there in the background. That's what a test is really for. Okay, because the biggest danger to professional money, imagine you're trading there with 100,000 contracts. you've got to tread very carefully, otherwise you're going to lose a lot. And they don't like that. They won't allow that. But I described a test sometime in the past. Imagine you are a general in the Second World War, and your army has been sweeping across, and you're aimed to capture a town which is ahead of you, filled with the enemy. So what do? You consolidate a few miles away, you shell the hell out of the town, send your bombers in, do everything you can, and then before you send in your assault troops, who may get mowed down by machine guns if the enemy's still there, you send in a patrol, you send in a test. Might be 9 guys, all blacked out, right? And they creep out in the middle of the night. They go into the town, in other words, they test the defenses. Is the enemy still there? If the enemy's still there, then that message will go back to the general sitting in his tent to be very, very cautious. The enemy's still there, and your assault troops may get mown down by machine guns. But if on the other hand they fled, the enemy, you can tell the general, look, the enemy's fled. The general says, oh, great. And he can send in his troops knowing that they're not going to get mowed down. That's a test. And the same thing happens in the stock market. The biggest danger to professional people who've got these huge amounts of contracts going is that there's other people out there waiting to do them in, if possible. And that's why they test the market.
Okay, thank you, Tom. So that's it, folks. Thank you very much for coming. We are doing a newsletter, I think, Sunday, and what else can we say? The video will be uploaded. Today's video will be uploaded, the recording, to the website, and if you want to review it, or you came in late, and we expect to see you. Well, we'll be here next week, so hopefully see you next week. Have a nice weekend, and we'll see you then.